morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And we run this from Silicon Valley, but really with a global footprint. We work with entrepreneurs all around the world, and at these roundtables, you often encounter people from very, very different, diverse parts of the world. This is our 391st session, so these roundtables have been going on for a long time. 2008 fall is when we first started experimenting with this format of mentoring, and we are about to do our 400th session in mid-May. So long journey with many of you. And it's been a real privilege working with so many of you in so many different parts of the world and learning what you are doing, what you're thinking about, what problems you're solving. Recently we had a presentation from Kashmir in India, and this was somebody who's working on an idea that is a subscription service for milk delivery in the Srinagar area, which is a large town in Kashmir, but really quite far away from any of the entrepreneurship hubs of the world. And when I see presentations like these, I feel really good about what we are doing, because the whole point of starting 1 Million by 1 Million was to make entrepreneurship education, incubation, and access available to a very wide range of entrepreneurs in different corners of the world. So I look forward to, of course, hearing from many of you today. The event is being recorded. The recording will be on our YouTube channel, 1M1M Roundtables, and all recordings are on that channel. So you can go back and listen to previous recordings as well. If you're live tweeting the show today, please use hashtag 1M1M. And our Twitter handles are at 1M1M, and that's Romana. We publish a lot of interesting content through those channels, so you can follow our work, our publications through that. These are the call-in numbers. I'll put this slide up a bit later. We're not quite ready for call-in yet. We have other programming before the Q&A. But it is a roundtable, and we want you to participate as much as possible. So please do line up your questions. You can participate by calling in, and throughout the session, you can participate also in public chat. Be sure to set your public chat to send to all participants, and that way everybody will be able to see what you are asking or what you're commenting on, weighing in on. Do not send private chats to me, because I will be busy, focusing on what's happening in different presentations or in the conversation with our guest, Ben, whom I'll introduce in a moment. But that's, it will be hard for me to also dialogue with you in public chat while I'm doing that. But I will take questions from public chat once the early programming is over. Okay, well, we're going to start today with our conversation with Ben Mathias of Vertex Ventures. Ben, welcome to the session.
Thank you, Samana, and thank you for having me here.
So, Ben, let's start by introducing you to our audience. What, some background about yourself, some background about Vertex Ventures. What do you, what size fund, what is the focus?
Yeah, my background is I became a VC about 11 years ago, and before that I was actually a tech guy working in Silicon Valley in the enterprise software industry. I moved to India about 10 years ago to start VC investing here. Joined Vertex 3 years ago, and just a little bit of background on Vertex. We are a global network of funds headquartered out of Singapore, and we have active funds in the US, we have one in China, we have one in Israel, and I'm a part of the Southeast Asia and India fund. We're an early stage tech-focused fund, typically invest in Series A, sometimes Series B, And our initial check size is just like typical Series A investors, between $2 and $5 million. And then, of course, we reserve money for follow-ons.
How big is the fund?
Broadly, the Southeast Asia and India fund is $210 million.
Okay.
And our current fund, we closed late last year. And so we're about a third into the investing cycle of that fund.
Okay. So just FYI, we had your Israel partner here recently as well. So we've heard from the Israel perspective.
I know, I saw that.
So what sectors do you like to focus on?
We've done a variety of software investments, both in Southeast Asia as well as in India. I'll give you some of the recent examples. We invested in a company called Active AI, which is a software for conversational banking. A company that originated out of both Singapore and India, but now is pretty much selling globally, including in North America. We also invested in a company called Flutura, which is industrial IoT analytics. Again, that's a company that originated in Bangalore, but is now deployed in several large oil and gas companies in the U.S. and in Europe. So we look at all types of software, enterprise SaaS, IoT, AI, a lot of fintech software as well.
So B2B though, mostly?
No, I wouldn't say that. Our fund, we've done both B2B and B2C. We have a very strong B2C portfolio as well. For example, we were the first investor in Grab, which is the ride-sharing leader in Southeast Asia. We also are investors in M17, which is the largest video streaming, one of the largest video streaming companies in Asia. And then First Cry, which is the largest mom and kid e-commerce company out of India. So we've done a lot of B2C. I'd say a lot of our recent investments have been in B2B and in fintech across Southeast Asia and India.
Let's spend a few minutes talking about geography. You're talking about South Asia, Southeast Asia. What is the boundary of where you like to invest? And then I'd like to also understand configuration. We obviously cover India very extensively, and as you know, we have a big presence in India. So we have come to observe a bunch of trends that I'd like to discuss with you in terms of configurations of companies. So why don't you start and I'll probe.
Yeah, in terms of geography, Shramana, we are a Southeast Asia and India-focused fund. So other than India, we also invest in companies in Singapore, Indonesia, Malaysia, and we're looking at opportunities in Thailand and Vietnam as well. From an India standpoint, we invest in companies that focus on India as a market, and we also invest in companies that originate in India but focus on global markets. And a lot of those companies tend to evolve into being cross-border companies, typically one founder in India and one in the U.S., and in some cases they even shift their incorporation to the U.S. And a lot of the operations remain in India. And
so would it be fair to say that your consumer investment is in the markets that you're in, like the Indian market or the South Asian market, Southeast Asian market, whereas the B2B investment is global?
That's correct. So consumer investments, typically if it's a company that originated in India, it stays focused on the Indian market because that is a very large market, as you know. If it's a company that originated in Southeast Asia, for example, in Singapore or Indonesia, they tend to expand across the region, and they eventually expand to all the Southeast Asian economies. So Grab, for example, is now in most of the Southeast Asian countries. So,
do you invest in
B2B
ventures that would be Indian B2B facing, for instance, Indian SMB, Indian B2B?
We do, and in fact, most of our companies started off as being as having their initial customer base in India. But at the end of the day, the Indian market, B2B market, is limited in size. And you could probably get to be a $20 million ARR company if you're focused on India. But if you really want to get to the $100 million ARR, you need to be focused outside of India as well. And we find sort of two categories of companies. There are the companies that have built solutions for emerging markets, and they would typically expand out of India into Southeast Asia and the Middle East. And there are companies that have built technology that are applicable in global markets. And then the quickest path to success there is to be able to start penetrating the U.S. market. But all these companies all originated in India. Their first set of customers were Indian customers, and those customers helped them hone the software and really fine-tune it before they start taking it overseas.
What, if you look at the deal flow from the last 12, let's say 15 months, what are the highlights? What trends are you seeing?
Yeah, it's interesting. The deal flow has really changed in the last couple of years. So 2 years ago, we saw a lot of deal flow in consumer companies, B2C companies. We saw a lot of deal flow in the shared economy, for example, shared ride-sharing, logistics sharing, those kinds of things. But that sector sort of, I would say, matured beyond Series A, and the clear leaders have emerged in those sectors, and those leaders are now raising B rounds and C rounds. What we're seeing a lot of now are sort of two categories. One is fintech. We still see a lot of early-stage fintech companies, and then we see a lot of enterprise SaaS in the Series A, and typically companies that have raised $500,000 in seed funding and have gotten to close to $1 million in revenue, and then are ready to raise their Series A. And then we're starting to see a lot of pure-play tech companies, AI, NLP, IoT. The challenge there, of course, is to sort through all the fluff and really sift out the companies who are doing genuine technology development rather than just using the buzzwords to impress the VCs. The good news is that we've started to see a lot of pure-play tech companies in the last 1 year.
Can you elaborate on some fintech concepts that are promising in the current Indian landscape or Southeast Asian landscape?
Yeah, so fintech, we're seeing a lot of different things within fintech. So one of the big areas that we're seeing a lot of is in digital lending, both for SMEs as well as for consumers. And the success of Aadhaar and UPI and also the eKYC norms that have been rolled up by the government are lending themselves very well to digital lending. And so we've seen a number of companies there. We've also seen a lot of companies in personal finance, so wealth management, investing strategies for middle-income people. Typically, the higher-income people get one-on-one personal finance help, but people who are 25, 30 years of age who are in IT jobs, they don't have a solution available. So we're seeing a lot of companies app-based solutions addressing that. The other thing we're seeing a lot of is supply chain financing, so businesses to finance their receivables. And this is across both India as well as Southeast Asia. The one thing we're seeing in fintech, the trends are fairly similar across the region, and we're able to sort of learn from various companies in different geographies because of very similar trends.
And what is your assessment of the regulatory situation around all this?
Well, I think the regulatory situation has definitely come a long way in the last few years, and definitely with UPI and the eKYC norms that have come out, it is a lot clearer in terms of regulation. One thing that we're still waiting to evolve is P2P lending, the regulations for P2P lending in India. But beyond that, I think the regulations are quite clear on digital lending in the country.
The peer-to-peer is not yet in swing.
Peer-to-peer is not yet very clear. RBI has issued some guidelines, but I think the reason VCs have not jumped into that space is because the regulations are still not very clearly defined.
But all other forms of digital lending, there's no real regulatory hurdle in building companies. It's more execution hurdle.
No.
Okay.
Yeah.
Good.
Yeah. There's no regulatory hurdle for the other forms.
And in terms of deep technology companies, could you share maybe one or two examples from your portfolio or from your radar that are interesting global potential, projects?
Yeah, let me talk a little bit about one of the companies I mentioned a few minutes ago, Active.ai. This is a technology company that's building technology solutions for conversational banking. And they are deployed with several large banks in India. They're deployed in one bank that's across Southeast Asia and also one in North America, being used in multiple languages. And the use case here is basically for people to do their banking either through a chat interface or to a voice interface. This could be transactional banking. This could be something as simple as QAs, FAQs, but different customers have deployed it in different ways. And when the company first came to us at their seed stage a couple of years ago, we were not quite sure whether this thing would actually get adopted. But we've been very excited by the fact that several large banks have actually adopted this and have gone live and are using this in production. And this is technology that got built in India, but is now being used in North America. It's being used in several countries in Asia. And we're very excited about this company.
And what is the funding cycle of this company? Where, how did the company build its technology? What stage did it start raising money? Where has it raised money, so forth?
Yeah, so it raised money, I think the first round was about 2 years ago. The company, first of all, got started in the 3 founders, 2 in Singapore, 1 in Bangalore. It raised the seed round about 2 years ago. And then we started talking to them maybe middle of last year for the Series A. And in, I think, October, November, we closed the Series A round. We led the round. The seed investors, which were IDG and Kalari, co-invested with us. And then we also got a couple of other investors to come in for about $1 million each. So this was about an $8 million Series A that we led.
And that's the only fund financing they have so far?
That's correct, yeah. So they've done the seed and they've done the Series A.
And for a company like that to get to Series A of the style that you're talking about, what are the metrics? Is there already revenue, significant revenue, $1 million revenue? What are we talking about?
Yeah, they were at about $1 million of revenue before, at the time they started talking to us for the Series A. And really the metric for us was, can this thing be adopted outside India? Because as I mentioned earlier, you can be very successful in India, but only get to be a $20 million business. So number one, is the technology applicable? Are there non-Indian companies that will use this? And number two, are the founders really capable of selling outside India? And we see a lot of companies with great potential, but the founding team doesn't have that experience, that skill set to go into North America and start selling, for example. And this team proved it to us because they sold both in Southeast Asia as well as in India. Sorry, as well as in North America. So those are kind of the 2 metrics that we looked at. We also did a similar investment in a company called Futura, which is industrial IoT. Very similar situation. When they came to us, they were about $1 million in revenue, and they already had Fortune 500 customers in several countries. And that's what got us convinced.
So it's a reasonably fair statement to say that Series A deals in your geography are happening post-$1 million revenue run rate.
That's correct. And the good thing about starting a company in India is that the costs here for developers are very low. And you can build a company, you can get the product out, and you can get your initial set of customers with under $500,000 of funding. And there are a good number of incubators and accelerators, seed investors in India. So it's a very healthy ecosystem for seed-funded companies right now. And we actually have a problem of plenty because we have a lot of companies coming to us that have reached that $1 million ARR, and all look very attractive, but of course we can't invest in all of them.
And when you look at the Indian geography, like, within India, what is the distribution of deal flow that you're seeing? Is there a bias towards Bangalore? I know Chennai has done pretty well. Pune has done well. What are you seeing in terms of a more general statistics from your perspective?
Yeah, it's pretty scattered. I'd say about Bangalore for sure is the leader in terms of number of companies, but we do see a lot of companies coming from Chennai, from Pune, and also from the NCR region. And recently we started to see a lot of startups out of Hyderabad as well. So I'd say
all the cities are performing.
Good distribution.
Okay.
Sorry?
All the cities are performing, all the major metros are performing. Yes. What about the Series A gap? You just said that there's a lot of companies that are able to get to $1 million ARR. How much of that pool is getting the Series A funding, and what percentage is falling into the Series A gap?
Yeah, there are probably about 10 to 15 active Series A funds here in India, and I'd say that's just about enough at this point. So I don't think we have a shortage in Series A. And all of us interact quite a bit. We share deals. We co-invest on opportunities. Where there is a gap, I do believe, is in the Series B and Series C. And on the consumer companies, we do get, I'd say there are a lot of Chinese investors that are coming in, investing in the later stage rounds for the consumer companies. But if you're not able to get one of those investors, then you're sort of stuck for the later rounds. And in the enterprise companies, I think to get to Series B, Series C, you really need to start going outside India to find those investors who write the larger checks.
But that's really not a big problem, because if these companies are trying to go global, it sounds like most of you are investing in Series A deals that are global B2B. If they have the metrics, and with their Series A funding, raising Series B, Series C in Silicon Valley or elsewhere in the U.S. is not that difficult. Are you in agreement with that statement?
That is true, and I think the role of one of the roles that we play is to number one, help the founders get established in North America, and we're finding that they don't necessarily move only to Silicon Valley. We've got some people move to New York,
yes,
and get them really settled there, get them plugged into a network, get them introduced to advisors, and then of course get them connected to the VC ecosystem. And that sometimes takes 6 months to a year before they can really get settled in, but that gives them enough time before they have to raise their Series B.
Mm-hmm. And what is your analysis of unicorn mania? We've settled down a little bit here in the Valley. My sense is that in India, the unicorn mania that did happen, I was surprised that it happens to that extent, but it seems to have settled down. How do you parse the happenings of the last 3-4 years?
Yeah, it has settled down here as well, fortunately. Many of the, I don't think we've added to the list of unicorns beyond the initial list that we had a couple of years ago. There are companies that are sort of getting into the multi-$100 million valuation. And the good news is that the companies that are getting there are companies that really have good cash flows, that are stable companies. So we have a company in our portfolio, First Try, that's getting to that range, and they are close to cash flow positive at this point. What has gone away is the mania of companies that are losing millions of dollars every month and are just getting funded for no reason. So I think things have definitely become a lot more sensible right now.
So the bidding war that happens to get to these multi-billion-dollar valuations that created this unicorn mania were kind of driven by a few funds. How has the behavior of those funds changed?
Well, they're still active in India. So, for example, you still see funds like SoftBank, Tencent, Alibaba still writing large checks in India. But I think they are the behavior in the last year has changed, and it's the really high-quality companies that are raising the $100 million plus rounds right now. Another example of a company that just raised a large round is Big Basket, and Big Basket's metrics are very strong, from what I understand.
So the competitive bidding is not happening. Is that to me? How do you check the valuations?
No, the competitive bidding is not happening right now.
I see.
And the other thing is, of course, there isn't a very large pool of investors that are able to write these $100 million plus checks. There's just a handful of them. So I don't think there's need for competitive bidding at this point.
Okay. So my last question is, an observation that we are in 2018. A lot of stuff has already been built. And, relative to the amount of capital that is available in the market, there are, 700 plus micro VCs in the market right now. There's a huge number of entrepreneurs who are starting companies and so on and so forth. We can't expect that every single venture out of this cauldron of creative energy is going to become a billion-dollar company. It's just not mathematically viable. Those are rare, skill sets, or those are rare market opportunities. But there are actually lots of opportunities for building smaller companies. If you're looking at 100 million, 200 million, 300 million TAM, there are lots of niche opportunities in those spaces. And there are some funds that I've talked to who are making note of that, realizing that it's not necessarily as easy to constantly for everybody to chase unicorns, and they are investing in some of these companies with the caveat that they will have to seek early exit. Are you seeing this phenomenon in India? Because you said there is a lot of companies that are getting to $1 million ARR through their seed funding. And my observation is that not all of these companies actually are playing in these billion-dollar markets. You can get to $1 million ARR in a 100 million TAM market or in a $50 million TAM market that would not really qualify for a significant Series A funding because of the TAM issue. What's happening to this pool of companies?
Yeah, I think the companies that reach $1 million and don't get Series A funded, these companies are actually cash flow positive at this point in time. So they can choose to remain at that level and continue to grow, maybe not as fast, but they will grow from, without any additional capital, they will grow to $3, $4, $5 million on their own. But you hit the nail on the head. I think a very good investment model that is very doable in this geography is to build these companies to get to $100 to $200 million in valuation, and then have them get acquired. And to get to that stage, particularly for enterprise companies, you don't need to look beyond a Series B, which means that they don't need to raise more than $15, $20 million of capital. Get to
or a lot less, actually. The bulk of the exits happen in the sub 50 million valuation range. So if you can build a company for, very small amounts of money and sell at the sub $50 million range, that is a decent success for, a set of entrepreneurs and a set of investors, as long as you control the parameters that drive making such an exit successful, that you haven't raised too much money that then it's not an interesting exit, right?
I agree with you. In fact, we've got several companies in our portfolio where we've done the Series A, that are at a point where they can be acquired for $50, $100 million. And there have been soft feelers from potential acquirers. So we know that we can sell them if we want to, based on the scale that they've achieved.
What are some examples of spaces, more like the categories in which you're seeing these companies?
So the enterprise companies that I talked about, so the IoT company, the conversational banking company. We also have recently invested in a company that is a SaaS solution for small, medium-sized hotels. They've got 2,000 hotel customers across the world in about 100 countries. There's been soft interest from strategics to either come in or to acquire the company in the future. We've got an investment in a company called SignUp, which has 10,000 SME customers in the U.S., built out of India, 35-member team out of India. And there again, there's been sort of soft feelers from people to look to either come in as strategics or to acquire the company. So we do know that all these companies
are paying attention to that phenomenon, that there are, not everything is going to be unicorns, but there are smaller exit possibilities as well.
Yes, and our fund economics can be very successful with these $100, $200 million exits.
Mm-hmm. All right, well, very good overview of your activities, as well as a good, trend analysis and back and forth on the Indian and South Asian market. So thank you, Ben, for your perspective. Are you staying for the rest of the session, or do you need to drop off?
I will probably drop off, Shamana, that's okay.
Okay, no problem. Well, thank you for coming today.
Thank you. Thank you so much.
We're going to switch to the entrepreneur pitch session. Now, remember, this is a working session, and you can feel completely safe discussing what your issues are, what you're struggling with, and so forth, and we'll try to, give you perspective on how to address those roadblocks. We are completely on your side. We have no other agenda other than helping you figure out your challenges. Do remember, though, that you could disagree with my feedback, and you don't need to feel bad about that. It's your venture. You will eventually decide on what you want to do with your venture. Just remember one thing, that not all businesses can raise money, and raising money doesn't guarantee success. In what we were just discussing, if you raise too much money and you can't find an exit at a price that is compatible with the amount of money that you've raised, that constitutes a failure, and nobody makes money in that situation. You could end up spending 8 years building a company and get into that situation where you raise too much money and no one wants to acquire you at a price that is interesting to your investors or yourself. And that creates, even if you raised a lot of money, that creates an unsuccessful situation, and you could end up making no money at all after 8 years of work. So that's, these are just some nuances of the business that you're going to need to take into account as you navigate your journey. Maureen, could you freeze the video, please? We're going to go to James Corbett from New Jersey. James, please unmute your line and tell us what you're working on.
So first off, before jumping in, I wanted to say thank you for doing this, and that was a really awesome intro. I love listening to him, and I looked at some of their investments in the past, and my goodness, does he have a pedigree in that venture capital firm. So I want to say thank you for allowing us to join in here. So just to really get into the presentation, I want to start with a story. It's important. It actually goes with our proof of concept and everything. So First Responders Live is aimed to humanize first responders and citizens using social video and data visualization tools. An example of this is Jason Gadram, who is our proof of concept and also an advisor for our company, just recently as well, so you're not going to see him on the slide, by the way. But Jason had an encounter the other day that resulted in the individual he was arresting saying, "I was thinking of running, but I didn't because I know you." So the power in that kind of in that situation means it was safer means there wasn't a high-speed chase. Nobody got hurt, all because the individuals knew each other. So what we're doing, if you could go to the next slide. So what we are doing, meaning James, Chan, and William, with our backgrounds, mine being in social conflict theory, criminal justice, economics, and marketing, and Yo's being, he's getting his master's in computer engineering, electrical engineering, and computer science, and Will as well being a computer science major, and William and myself being designers, are creating a product that we hope will become you know, a smash hit success with police departments and citizens alike. So we're building a video chat platform. Thank you. We're building a video chat platform for first responders and citizens to talk to one another. So think Facebook Live, or if you know the smash hit show here in the United States called Cops or Live PD, just imagine putting that into an application and allowing citizens to talk back and forth with the officers and to go on virtual ride-alongs with them. So how we plan on making money with this is we're going to go for a full department license, which could be $20,000, but the price increases if there are cities larger than 100,000 people. The maintenance costs are at $9.99 per month, or the department could just outright purchase the application, have their own branded application just purchased, and they'll maintain it. They'll hire the engineers to maintain it and to improve it at $150,000. However, we are going with a free app. So basically we have a freemium business model. We also have a free app where any department can join in. They can live stream through it. However, the live videos will be sponsored by businesses. And businesses will be paying $500 per month to sponsor one department, or one town per month. And they will be able to add on multiple departments or towns at $100 extra. So the immediate value for the businesses would be that they can partner with the different departments and leverage their social media following to get in contact with those citizens. Also, in-app, we are going to have a citizen-facing application, and once that launches, the businesses will be able to put and have a banner, as you can see the example there, have a banner in the application underneath the town sponsor section where they'll have a click through, where they'll be on a full page where they can show specials or their location or whatever it may be. We have other potential revenue streams as well. Once we do launch, we're going to begin to ask citizens, hey, would you pay for upgrades to have access to all police departments? Or is that something that businesses can cover? Also, with crime prevention data that we're planning on creating with departments, meaning how many mentors there are, how many coaches or volunteers are in police departments or fire departments are actually in there. Can we sell that data? Can we sell it to yeah.
One piece of feedback I have on your business model is that in modern software industry, people don't really do outright purchase and all that, and this, department license, maintenance cost mode. This is kind of like an outdated software model. Today, everything operates in a software as a service model, which is a monthly subscription fee model. So I would strongly encourage you to take that into consideration and review how you want to do your business model, because there's no point going against the grain of an industry if you have to play in that industry.
Okay. I guess afterwards, I would like to hear a little bit more about that, to be honest, because that is something we're really focusing on right now to improve. So the value prop to scale. So the value proposition is very simple. Right now, all of our competitors who aren't really competitors because they don't have something that's video focused or video conversation between citizens and officers. They have text-only communication. They have social media, which is obviously flooded with popular media that they have to compete with. It's city maintenance or 311 data or applications, and evidence collection, crime data, and email communication. What we're doing is and they're also departments to citizens. What we're doing is we're trying to create that introduction of individual officers to citizens, where instead of it being like Officer Gadram, it's just Jason and whoever it is that he's, dealing with it in that moment, and with the citizens themselves. Proof of concept. we have Jason, as I've mentioned before, Jason Gadram. Right now, he has a population that he serves out of Logan, Ohio, 8,000 people. His page has 30,000 plus followers. That actually brings up some problems for him, but it shows that people do want something like this. However, the issue that he runs into is management of the platform. When it begins to go viral, he actually doesn't like it when his videos are trending, because then trolls come in and present some issues, which we can help with, obviously, with profanity filters and with allowing it easier ways to, block people or get rid of people, and also getting down to helping out his citizens themselves. So
James, is Jason paying, or is this a unpaid proof of concept?
Jason is unpaid currently. He's going to be jumping on. Our platform is getting submitted to, it's finished being built, the first iteration. We submitted to Facebook to get approval. That's the only thing we're waiting on now. All of YouTube works, Twitter works, and we're just waiting for Facebook to approve our application. And he'll jump on and use our app to live stream and to begin to spread awareness to the citizens. And then once awareness begins to build, we'll hopefully have our citizen-facing application done in the next 2 months. And then after the citizen-facing application is done, he's going to fall back on using that. And, by that time, I have a few meetings with departments coming up, so hopefully I'll have some more departments on there, and we'll slowly build this thing up. So it is unpaid, but we do have a plan of action.
Okay. So what questions can I answer for you?
Can we go back to the business model?
Sure.
So right now, I would like to figure out the best way, because the best feedback I've gotten so far was the town sponsorship is good. The department, if they get like their own labeled application, is potentially not scalable, and that's actually the same thing that I got from you, it seems. What do
the way I would price it, I think the fact that you're planning to sell to police departments is good. What you need to validate is whether police departments are willing to buy, of course, and pay for something like this, and then you have to price it in a monthly subscription fee mode. So let's take what you have here. You have a $150K outright purchase assumption. So if you spread that in 5 years, let's say, that's $30,000 a year. So you're essentially looking at about $2,500 a month kind of pricing model, or less. You could even price it for, $2,500 a month for a police department is probably doable, but you're going to need to go validate that with a police department, with a number of police departments. So I would say if you were following our methodology, I would ask you to go look at the customer validation module in our curriculum and follow that strategy of customer validation using that assumption, $100 a month subscription, monthly subscription fee model, and see if that validates across multiple police departments.
So it's funny that you say 2,500, because this is actually almost, I'm coming back to it, because I went into a police department, one of the police departments has actually been helping us with the design and the building process of this locally. It's called Vorhees Township. I said to them in the beginning, I'm thinking that you're going to have to be paying like around $2,000, $2,500 a month for this product.
Yeah.
And their eyes almost like just popped, right? Like they were like, wow, that's very expensive. And it's because a lot of police departments right now don't necessarily have the funds because of the, change of regime in the United States, and how they're actually reducing funding to departments, and they're actually.
If you talk to a bunch of police departments and that's the feedback you're getting, then your pricing needs to be consistent with something the police departments are willing to buy. Maybe they're willing to spend $500 a month, but that is the validation that you need to do right away. That is your number one priority, is to go talk to 100 police departments and figure out what is your business model and what is the pricing model, and what is the price point at which you can charge them monthly.
Got it.
Okay.
Very cool. Yep.
All right. Joyce Shanahan is up next. Joyce, please unmute your line and tell us what you're doing.
Hi, Sarmana. It's Joyce. Okay, you can go to the next slide. Okay, the name of the venture is Silicon Valley Tech and Social Entrepreneurship. It's a little spin-off from what you're used to doing, as it's not completely for-profit. And it really came out of working with one of the churches in Palo Alto, and there's many of them who are downsizing. There was extra space, and we were looking for a focus to get the co-working space filled up. So I went to see where the meetups were for the social entrepreneurship, my particular interest in the tech aspect of it also, and there weren't any. There were no meetups, so I got this note to create a meetup, and I just kind of, for fun, started filling it out and realized that that's really a gap in the market right now to put those two together, and also, given my background in kind of the for-profit world, but a real fascination. I've led an incubator, as you know, in Chicago with the for-profit. So not only does it combine those two things, but more importantly, I think it's a really important issue is to get those who are highly skilled in technology and have the interest in social impact together with the many social entrepreneurs throughout the country, starting here, who
Joyce, I have one feedback for you before you go on.
Okay.
In the nomenclature. If you say technology, Silicon Valley tech and social entrepreneurship, it's confusing because what you're trying to actually do is technology-enabled social entrepreneurship.
Oh, okay. Well, no, that's exactly what I'm looking for. Is those kind of things, technology-enabled
social
okay.
Entrepreneurship. Okay,
and
so you have done some research. There are 340,000 nonprofits out there, of which tech-focused or tech-enabled, not tech-focused, tech-enabled is only 347.
Okay. Right. I mean, they're all using some kind of tech, as you know, but the ones that are actually have the tech impact.
And what is the distribution? Have you assessed the distribution of these tech-enabled social entrepreneurship?
No, I haven't yet. I just got those numbers recently, and I'm going to be looking for more information on that.
Okay.
The people I'm trying to reach, particularly initially, is the highly skilled, competent technologists. And I just heard anecdotally that there are many engineers out there working, around the clock. As you know, they work long hours, who are really interested in either on their time off from their big projects or after work, and putting their energy in something that might have a huge impact in the developing world.
So, I mean, a very good starting point, and maybe you've already set this up, is to set up a meetup group, tech-enabled social entrepreneurship, and get, start building the community around that. But the bigger question then is, what is the value that, besides getting together, meetups tend to be free, as you know, what you could charge for the meetups as well, I suppose. What is the business model of this venture, and what are you going to deliver to these people?
Okay. Well, I got the support of the church space in terms of they're providing the food, and they really want to get some action going there. So I'm kind of using that. I have a meetup set up for next Monday. I don't have the network that many have in this area, so I haven't gotten a great response yet, but I'm planning to do that actually after this call, is try and link up with incubators like Fast Forward that are doing social entrepreneurship in technology. But in any case, the business model right now is just to kind of see where the interest is, get people together, brainstorm, talk about the mission, get feedback and input, and that will hopefully evolve into different projects and different ways to, and that's one of my questions at the end, different ways to use for it to flow.
So you're going to need to bring in speakers. If you want to charge people, for example, if these people around which you're trying to build the community, you're going to need to be able to charge them, and typically the kinds of events that allow you to charge are speaking events. I mean, I've spoken at many meetups, and I don't make the money, but the meetup organizers do charge for those events often.
Well, for the first one, we thought not to charge and just kind of, I think it'll be a smaller group and get something going and then kind of have it build up. And I actually had 2 people already who were asking to speak. Of course, you have to watch who speaks because I don't want people selling stuff up there. So I'm just really, for the first meetup, wanting people to share who they are. I've gone to a lot of entrepreneurship meetups where everybody just gets 2 or 3 minutes and that's the whole meetup. I see what you're saying, though. At some point that gets old, and I'll have to have, or I want to have experts. Like I saw a Stanford professor, one that started the Social Entrepreneurship Spark. Another one of her colleagues started Fast Forward. So I know there's a whole network of
so there are lots of social entrepreneurs in the Bay Area, and yes, you can put together a monthly speaker series without huge amount of problem. The question is, they will only come to speak if you can create, you know, traction. There needs to be an audience to speak to.
Yes. I mean, this is just a list of the people that I think, you know, who I think would be interested, that customer validation. Obviously, I'm trying to fit kind of this idea into your model, and it does work.
The question is, how do you reach them? Yeah, how do you get to them?
Yeah, well, that was that other slide where I had social media articles, you know, the whole inbound marketing idea, networking, talking to people who have larger networks than I do. So that's a work in progress, and it will probably also evolve as I go and meet people and find those who are interested in using their networks to expand this whole notion.
What is your definition of success?
Certain amount of interest. Haven't decided exactly what that is, but, you know, so people wanting to come, excitement, not having to drag people out, but people going to the meetups and things, projects coming out of it, and ultimately a way for me to dovetail that into salary and some, whether it be grants or, I think grants is probably the easiest way to go with this, but there's also fee for service and so forth, kind of like what you're, you know, you've got a different model, but something like that. I'm not really sure. I just figured I would start it with the meetup on Monday, do what I can to get people together, and kind of see where it all goes.
If you can get some people to come to that meetup, figure out what are they looking for. You know, any business, as you know, has to provide, whether it's for-profit, non-profit, whatever, has to provide value. Otherwise, people are not going to come. So, you know, having a speaker series is one kind of value, and that has associated networking and so forth attached to it. But what other things are these people looking for? A very typical, very, very common requirement for a lot of social entrepreneurs and nonprofits, people who run nonprofits, is funding. So you could, you know, work with the people who are in the industry, who provide, you know, who are from foundations and so on and so forth, and see if you can, you know, create your speaker series around nonprofit funding, for example, and that would probably bring in a lot of nonprofits.
I was kind of thinking of, at least initially, less of a speaker series and more as a way to go and meet other people who are interested in the same area, potential.
That will not be able to charge for that.
Well, I think I wouldn't mind not charging. I'm not charging on Monday, and it might be not worth the trouble to get, you know, 15 or 20 bucks from everybody. It's not going to make a big dent. What I really would like is to get some action going so that I could apply for grants, start a 501c3, have a
you will not succeed in getting grants without a fleshed out value proposition. What you're proposing right now, you're not going to be able to get a grant for. So you better figure out what is it that you're doing and what is the value proposition to the community around which you can raise any grants. I mean, I understand that you're very early in the process, but you know, it's not that different in terms of creating something quote-unquote fundable, whether it's grant funding or venture funding or angel funding. It's not that different. You've got to show that the metrics are less aggressive if you're looking for nonprofit funding, but these are competitive situations. It's not like you're going to just walk in somewhere with something loosey-goosey and get a lot of funding. That's just not going to happen.
But it seems like there's a clear disconnect between, the potential of what the technology can offer and those who really need it. And I don't know how else it would. I mean, there's lots of ways for it to blend, but this is a targeted effort to put those two together. I mean, Silicon Valley is where you find the top tech people in the world. So that's kind of why I think this is the place to start it.
Yeah, but you're not going to provide the tech. What you're trying to do is bring a community together of people who already have tech background. So by definition, they're going to bring technology into your mission. This is tech-enabled social entrepreneurship. So the people whom you're trying to gather in this community are people with technology backgrounds who will take on social problems to solve using their technology background. So you're not bringing any tech nuance or tech expertise. You don't have tech expertise to bring into that equation. So that can't be your value proposition. What these people do not have is understanding of how to build perhaps a social entrepreneurship venture or a nonprofit where maybe you have expertise, maybe you have relationships or you build relationships with the funding sources and the social entrepreneurship funders. So that could be a value proposition. What I'm telling you is that don't get confused between what is your mission and what is your value proposition and what is your business model. Those are three different things.
Okay. Do you have any suggestions at this point on how to get initial interest in this initial meeting, ways to attract the right people?
Put it up
right now, today.
Put it up on Meetup, the Meetup platform, which is how you have found a lot of other people, and see what it does. But make sure that the name of the group is
tech-enabled,
properly represented, because otherwise you're going to get a lot of disconnected people. And explain your mission very clearly, is that you're trying to gather people who are from the technology background trying to solve global, social problems, and you're trying to gather these people together, understand what kinds of issues they're facing and how you can collectively address those issues. So if you can gather over time, if you can talk to 50, 100 people of this profile and have do basically customer immersion of understanding what are they looking for, what are their issues, that will give you ideas on what services or what kind of programming to bring into the group.
And how would you suggest validating, getting those people to validate? Just LinkedIn, just doing the usual networking and poking around?
No, but I thought you were just doing these meetups and a bunch of people are going to show up at those places and you get to talk to them.
Right. I thought you meant, well, you said, I don't think we'll have that. I don't know how many we'll have at the first one. I'm trying to get more, but like I said.
Doesn't matter. Even if 3 people show up, you get to talk to 3 people, and then next time you do it, another 5 people will show up, and so on and so forth. It doesn't matter how many, and it's also, you don't have to do it once a week. You can do it 3 times a week if you like. If you have the space available and if people are willing to, it's not a big deal.
If people are interested in working together, it's called Sacred Space. It's a huge church space that they're trying to just get activity and get, you have the community use it. So it's another,
and where is it? What part of Silicon Valley is it in?
It's in Middlefield in Oregon, right on Middlefield, that church row on Middlefield. And so it's a good location.
Yeah.
Yeah.
Good location. The only caveat I would say is if you have 3 people in a very big space, it doesn't create a good impression.
I know. So I'd like to get more than that. So I'll be working on that. But if there's any shortcuts or
I don't think
network
there are shortcuts
to tap on. Well, I think the only shortcut is finding somebody with a big network that's, for whatever reason, is willing to, put it out there. So that's kind of what I'm looking for.
I wouldn't count on that. I wouldn't count on that.
I don't.
And frankly, for a beginning meetup group like that, I think you probably are better off doing it not at the church with a big space, but doing it more at a cafe or something like that, which is much more intimate. As you know, that's how we do ours. It's much more intimate, much warmer, much more authentic. I don't like the idea of 3 people showing up in a big space.
Well, actually, there's like small conference rooms we could use, and there's a big parking lot. I mean, it's just really easy to get to, so that's one positive thing. But I hear what you're saying.
So use a small conference room, at least for the first few meetups. Even if you do it at the church, do it in a small conference room. Don't do it at the big space.
Yeah, and we're going to get pizza and you know.
Okay, let's move on. Good luck, Joyce.
Okay, thank you, Samana.
You're very welcome. Lavish Singhal from Agra, India. Come unmute your line. Tell us what you're working on.
Yeah. Hello, ma'am. Am I audible?
Yes.
Yeah. So, ma'am, there's like a whole. Thank you for inviting me and giving me a chance. So, like, what I am working on, like, to bring out a marketplace platform for services, particularly green building services. Whatever like I figured out is like in India we are actually doing a lot of green building projects in India, but on a smaller scale, if we'll say about at a SME level and home level, we are not doing these projects. They are being done in the big corporate thing and all. So idea is to bring out a marketplace platform for these services, wherein the consultants, service providers.
What services are we talking about? I've listened to you for a minute. I still don't understand what services we are talking about.
Sorry, ma'am. Services that we are talking about is wastewater treatment, building insulation services, heat pump, and waste management, and renewable energy. So these are the services what I am trying to coordinate into a marketplace model.
Okay.
So this is a market opportunity scenario. What we have done is what will be the market scenario in India next 5 years for green buildings, for waste management, and for water management. So it says some actually a huge market potential for these products. And if we can get the products on a platform, because there is no specific platform selling these products. So if we can bring those into a platform and sell those, and just capture a small portion of the market also, and create awareness about these products. So that was the idea. So based on that, we have done something. Please, can you shift on the next slide? Yeah, next one. So the problem here, what I have encountered is I have actually done some 7 or 8 projects, and the problem is first is awareness is not there. Like rooftop solar is one thing which is being promoted, but still the awareness to the common people is not there. Even to the builders, and it is not there. To the homeowners, it is not there. To the schools, it is not there. So like and then again the next thing is standardization is not there. There are people who are doing just for the sake of it, just make any kind of money out of it. There is no real engineering thought put behind it. And then visibility is also very, like these products are not visible in any of the spaces. They are just bound to some small construction magazines or wherever. And most of the work has been carried out on word of mouth recommendations, and that is where what we want to bring in a product or a platform wherein all these stakeholders can come together and execute these projects, wherein we can support them. Like we have consultants. I have consultants from not-for-profits, for-profits, those who are working in these fields, and they are ready to consult for the project for a minimal cost, and then these projects can be executed. So where our business propositions come in is we can provide them with the software support, we can provide them with the project management support, and then for customer part we'll give them the awareness and get it done on the best price code. What, ma'am?
Who is paying?
Customer, ma'am.
What is the definition of the customer? Is that the builder, the construction company? Whom do you call the customer?
Yes, ma'am. There is like whatever, like till now I have done for a what project we have executed is for for a builder, for an SME, for a school. So we have a wide base of customer. The problem which I am facing is that to target the lead cost is very high. Lead cost is very high in this area. So what I have figured out is why not to go in a B2B kind of thing. And there are already installers and consultants and providers who are providing the service. Why shouldn't we give them a more better technical scenario and a market outlook wherein they can compare the products?
But you still have to bring the customers to your platform. How are you going to generate that? So the lead cost remains high for the marketplace, right?
Yes, ma'am. But they do have the customers. So why they have the customers? Like if
I see. So you want to bring the service providers onto the platform, give them a software framework to work within the marketplace, and that's how you. Okay, well, worth a try. Sure. Okay.
Yes. So that is how we are. So, ma'am, the revenue model, what we are like approaching right now is first we went to the B2C model. Then we figured out lead conversion is high, and it's also time taking. To convince someone to do something for sake of nature is very hard in India. So the lead conversion is very high. So we thought of bringing the next model B2B, bringing bringing service provider to the marketplace and give them software support. And therein we have garnered some success that we are right now giving our services to some of the solar installers and some of the architects, wherein we are providing them with the software support in 3D modeling and analysis and designing. So we are providing them with this support. So we are right now charging them 1% fees for each and every project they are executing with us.
Okay.
And again, there is one more way. We are also getting leads to the platform. We have a small platform called envirobase.com. We are getting leads from there, and we are charging 5% per lead what they are executing.
And what denomination? What are we talking? What does 1% or 5% amount to? What is the
yes, ma'am.
The
1%. Yes, ma'am. The 1% amounts to somewhere around 40 to 50,000 rupees.
Okay.
These are ma'am. These are whatever the projects we will be entering and we are entering into. These are such big ticket projects that we are able to make 1% in terms of 40, amount comes to 40 to 50,000. And for smaller projects, what we do is there is like a lot of scope running in India on a profit sharing basis model. So what we are doing is, if a smaller project we are bringing to the consultant or consultant is bringing to us, so let's suppose the ticket price is 2 lakh rupees. So taking 2,000 out of a 2 lakh rupees business doesn't make a business sense at all. So what we are doing is we are agreeing like, okay, according to let's say architecture services you are providing, and we are providing you the 3D modeling support. So whatever your service charges, you pay 40% of the service charge to us. So we have executed one project in this model also. So we what I am right now confused is I have a project proof concept of the thing. But the problem is what I am facing is to bring in more people and to get them actually understand the thing that okay, this can be worked on. I have 8 vendors, I am working with them, I am getting revenue generated, but how to give it a better prospect and outlook, that is where the problem lies. I am purely a technical I am purely from technical background. I can provide the project management support. I can provide whatever support they want in the software part of thing. My team. But the thing is
how much revenue do you have right now, in a monthly basis or a quarterly basis? How much revenue are you making?
Monthly basis, we are making around 50,000 rupees.
And how many people do you have? Yourself and who else?
And one more person.
One more person. And you're based in Agra, so your cost structure is low.
Yes, ma'am. That is the whole idea of being based in Agra.
Great.
Because I could
That's wonderful.
Yes.
That's wonderful.
Yes, ma'am.
So you've got a business going, you've got revenues, you've got another team member, and you are able to get started. So it seems to me, Lavish, that you need to invest some time and energy in learning the methodology of how to build a business, which every first-time entrepreneur has to learn that. There is no choice. And, and the fastest and the most efficient way in which we can help you in that is if you study the 1Mby1M curriculum. It's like a mini MBA in entrepreneurship that helps you learn all the pieces. You know, there are 7 core modules and many sub-modules, case studies, video lectures, etc. I will talk about that a little bit later. I think that would be the fastest way for you to get up to speed on methodology.
Okay, ma'am. And
you're clearly a smart person. You're able to sell. You're able to generate revenue. So if you now map all your skill sets to a little bit of a framework and methodology, I think you can very easily scale this business, and we can help you.
Okay, ma'am. Can you please move on to the next slide? Yeah. Ma'am, the problem we both are from tech background, we both are civil engineers, so we are doing it. We started off as a consulting firm, and then we thought, okay, this is a problem. It started like, there's a story behind it. I'm from a family business background only. We have a pharmaceutical manufacturing unit. So we want to get an ETP, effluent treatment plant done in our unit, but we weren't able to find good consultants there. Because in that area, the quality of work was poor, and we were not able to get the desired product. So we went around Delhi, we went around Gurgaon. That is the time I got like, okay, why can't we build something wherein people can from remote places? Because in India, the industries are in such remote places that the place where my industry is, it is somewhere around 300 kilometers away from Delhi. So there is no point that I can discuss or I can go and check with the consultant on daily basis and frame out a methodology for my business. So the idea was to give customer this support and consultant the software side of support. So right now, where we have, like you said, that some entrepreneurship course I should do and building the business. So right now I have one way, like I have figured out some of the things where what can be done, but I'm short of this thing, technical expertise.
You're short of methodology. What I can see is that you're short of methodology, which is very easy to fix.
Okay, ma'am.
You know, we need you to study the curriculum for, you know, anywhere between 1 to 3 months, depending on how much time you're going to put into it, and we can fix this problem right now.
Okay. Okay, ma'am.
Okay. All right. So let's go to. We can come back to Q&A. Let me spend a few minutes just explaining to you how to use the 1Mby1M program, and then you can ask more questions on anything, whether on program or your situations, introductions, etc. Now, if you like what we're doing here in 1Mby1M, I would really like you to bring us some serious entrepreneurs who just like Lavish is presenting a situation, is clearly a serious entrepreneur who's already built a business that is generating revenue. We need to help him figure out how to scale and how to, you know, put structure around his growth strategy and so forth. I love these kinds of entrepreneurs, and doesn't matter what corner of the world you are or your friend is in, we are very much interested in working with you.
Thank you, ma'am.
So 1Mby1M.com is where you'll find all our resources. You can start by following the blog series, which is freely available on the site. The Entrepreneur Journeys book series has 12 volumes. There are tons of case studies. Each book has 12 to 16 case studies, and it double-clicks down on particular aspects of entrepreneurship. You can look that up and see if you want to start there as your learning process. We have these roundtables every week, so come to these roundtables by listening, by following. what's being discussed, you learn a lot, and there are recordings of all the roundtables available on our YouTube channel as well. There are lots of podcasts as well. The full acceleration program from 1 million by 1 million is 1M Premium. There you get extensive methodology guidance. The online curriculum is video lectures and case study based. We help you with business development where we have connections that you want to access. We have private sessions like these. These are the private roundtables that are members only, where you get the strategy consulting, the coaching, the mentoring on your project. So if you, basically what we want you to do is study methodology with the online curriculum at your own time, and then come to these roundtables, the private roundtables, to discuss your strategy specifically on your project. So you just heard Joyce Shanahan present, the second presenter today. She is actually a premium member, and she's working both in the public roundtables, private roundtables, and the rendezvous, which are in-person events in Silicon Valley, just to get further in her agenda. So there are all these different touch points through which you can get help. And if you are a fundable venture, we will also help you with funding. Now, we will help you get to fundability if your business has those characteristics. So there is a very comprehensive module in the curriculum on financing, and you can get guidance on your project vis-a-vis financing strategy as well. So there's the premium program is extremely comprehensive, and we have a very good network of investors that work with us and look at our projects and so on and so forth. We also help you get the word out through our media channels. So that's another thing that you can take advantage of. Now, one of the things that I request you to do in evaluating your business is the 1M self-assessment. Go to the website, and there is a link to the 1M self-assessment. Take that, put your business through that, and see what you are getting, what you're able to answer, what strategic points are you not able to answer. Where you get stuck on methodology, you can go to 1M Basic. This is the perfect option for you. You know, we just talked about this. For those of you who are stuck methodology-wise, this is a perfect option for you, and it's only $99 a month. You can sign up online and get going at your own time, at your own pace. So go to the website. There's tons of information about, you know, all the pieces of the program, the premium, the basic. There are FAQs, video FAQs. There's lots of description on the curriculum, the core, the electives, etc. As I said, the curriculum is case studies and video lectures based. We have over 800 case studies of successful entrepreneurs, 50+ unicorn entrepreneurs, 400+ venture funded companies, 350+ bootstrapped entrepreneurs, and you will learn from them. You are learning. This is a kind of mentoring that is scalable, so you can learn. It's like it simulates the experience of sitting down and having coffee with somebody who knows, who has been able to achieve, you know, significant levels of success. And it's, you know, you basically learning from their experiences. And before, all this used to be tribal knowledge, right? If you had the network, you would get a chance to talk to 2 or 3 people. Now, because of the work we have done of bringing together all these, you know, 800+ case studies, you can do it on a scalable model, and you can essentially simulate the experience of talking to really highly successful people at scale. You can have the experience of talking to 800 people, if you like. Our methodology is lean, capital efficient, bootstrap startups. You need to bootstrap first, raise money later. That is our mantra. So that's pretty much it. There are, you know, 5 roundtables coming up, March 1 more, and then 4 in April. We also have the in-person rendezvous in Menlo Park, 1 more in March, and then 4 more in April. So sign up and plan on coming to any of these and, you know, getting further with your agenda. The line is now open for Q&A. So anyone, whether you're on the phone or in the public chat. You're very welcome to start asking questions. If you would like to dial in, please feel free. If you want to ask questions in public chat, please feel free. You can also introduce yourself. This is a good time now to network. So tell us who you are, where you're dialing from, what brings you to 1M1M, what problems are you dealing with. Let me also introduce you to Irina Patterson, who would answer your questions about the program. Irina at 1Mby1M.com. She's very patient. She'll be happy to answer any questions that you might have. All right, questions.
So it's James Corbett. I was presenting the First Responders Live.
Sure.
So when it comes to, you mentioned that my business model was outdated. I wanted to maybe get a little bit more insight from you if you do have any kind of, I know you told me monthly subscription is like the way to go and everything, but when you have a market that is, so the market size right now in the United States is 18,000 police departments alone, with, like I was mentioning, a problem of shrinking funding, and, you know, they have free options with you know, social media, but there's an obvious disconnect and problem mentioned by departments all around the country where they say that it's really difficult to get businesses, citizens, and police departments all to interact with each other, and that's a problem. Like, so there's a problem with this model. I've known it for a while now, and I know that I have a product they want because I'm obviously talking to them, building it with them. They love it. They're like, this is really great. And that's why I was going towards that freemium model where, you know, it would get supported by local businesses and businesses by paying monthly subscriptions to have to support videos and such. Do you not think that that's a good model, or?
I don't understand your model. When I said your business model is outdated, I was talking about licensing software and outright purchase of licenses as opposed to subscription. So so the specific comment that I made about outdated business model was that. I don't understand your freemium business model, and I don't like freemium business models. Free trial is fine. You could set it up as like, hey, you get a 30-day trial or a 90-day trial, which we'll put you on the video and you start interacting with your community. But if you don't pay up after the trial is over, then we're going to discontinue your feed. That is a much better model than trying to do freemium, and you know, people may or may not convert, and that tends to be very low conversion rate scenarios.
Understood. Okay. So basically, like doing like a pilot test, like, hey, use our. I was planning on doing something like that, where hey, use our product for X amount of months. It's free to sign up.
Yeah, exactly. That model would work. Free to sign up, use it for 30 days, and then start paying the subscription. That's fine.
Okay. And so you don't, but here's the other thing that I feel as if and it's my feeling, and I did send, and I tested it too. I shouldn't just say I feel, because that sucks, right? But, well, anyway, so businesses locally, I put out some ads, and they said that, I actually met with one this past Monday, and they're like, hey, once you get a local police department on board, I want to pay to sponsor those videos. Like, I'm down for that. That sounds great. Because they're getting in touch with their local audience, the audience trying to sell to right now anyway. And they're like, I would love to do that.
Well, if that's a model that you can validate, again, you know, everything is about validation. As I told you, if you were to follow our methodology, I would send you immediately to the validation module, and I would like you to implement a proper validation strategy. Right now, you are validating, but you're doing it in a statistically insignificant way, and that's not. You're going to need to scale that validation methodology.
Okay, cool. So validation. I'm on your website now, by the way. I really appreciate this, by the way. You're doing this and
you're
everything.
Very welcome.
This is really
You're
cool.
very, very welcome.
This is really
we are
cool.
thrilled to help you, and that's why we're here. The only thing we do is help entrepreneurs, and that's just a very, you know, that is absolutely central to our mission. So
yeah, it's very awesome. I really do appreciate it, and I want to say that I do feel as if feel like I'm haphazardly validating right now the business model. I agree.
Okay. James, if you would give other people a chance to speak and ask questions for a moment, that would be great.
Sorry.
Sure, no problem. Mary DeMuro, you were asking, I think your question was in the context of Vertex. Do they fund only technology companies? The answer is yes. Technology or technology-enabled services. Our whole community, everything around 1Mby1M is technology and technology-enabled services only. We don't do anything other than that. So all investors who come to this forum are technology investors, technology-enabled services investors. Anybody else? Questions, comments? You can use the public chat. You can introduce yourselves as well. Yes, no? If you don't have questions, we're going to wrap up, and we'll meet you back here next time. So you have the schedule. We have the roundtable scheduled March 29th is the next one, same time, 8 a.m. Pacific, and then ongoing 5th, 12th, 18th, and 26th of April. So thank you, everybody, for coming today, and I will see you soon. Bye-bye.